What's up everyone, it's Kadi with MoneyVest. So in today's video, we are going to be talking about semiconductor stocks, so chip stocks in more detail. And you guys seem to love the analysis that I did on all cybersecurity companies in the past. And also before that, I talked about all chip stocks and semiconductor stocks. We did a complete comparison analysis on a lot of these companies, so that we're going to do an updated version of that in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, the links to our Discord and Patreon is going to be down below, with access to all the 46 plus members only private videos, including all of our spreadsheets, including all of our Discord channels, trade alerts, trade ideas, my trading view charts, our weekly newsletter, as well as our moneyvest.com website that's going to be launching very soon. And do connect with me on Instagram. My handle is going to be CASWRP with a link down below. I do post a lot of interesting stories and updates and polls and tips and strategies over there as well. So this right here is the semiconductor watch list, and what you'll notice is the entire chip stocks here, semiconductors, were down on the day. Of course, we saw a massive reversal back lower with, of course, Micron down a little bit over 1.3. Texas Instruments were down a little bit over 1.6. We got Super Micro down over 1.7, although it is now trading at well over $1,100 of the market cap, at over well over $63 billion for the company. AMD down over 1.8. We got TSMC down 1.9. Qualcomm, Applied Materials, Lam Research. We got SMH, the VanEck Semiconductor ETF, down almost 4%. I did trim a little bit of SMH, locked in just over 45% profit. We got Intel down over 4.6. On Semi down 4.8. ASML, one of my top positions, also down over 5% here. And NVDA dropping over 5.5%, back down under $900, and Broadcom dropping almost 7% here on the day, selling off down to about $606 billion, the third largest on the list here, after, of course, NVIDIA and TSMC. And again, Broadcom is going to be the third largest. ASML is going to be the fourth largest at $410 billion, and of course, followed by Advanced Micro Devices, that is sitting at well over $335 billion. So those are the top 5 companies in the semiconductor sector. And again, you can actually access my entire watch list here. If you do join, there's going to be a link in our Discord for all the charts and all the watch list that you can also access with a link down below. So coming over to our analysis from the past, so this right here is the entire breakdown. We're going to quickly run through some of the fundamentals of these companies, and then of course go over the technical analysis. We're going to put more weight on the technicals this time, because I already did cover the fundamentals in one of my other videos. But you'll notice that Intel is still down a little bit over 12% on the year, followed by On Semi, which is also lower, a little bit over 5.4%. Those are the only 2 stocks that are down on a year-to-date basis when it comes to semis and chips. SMCI, of course, it's up the most, up over 300% so far on the year. NVIDIA up over 76%. We got AMD up over 40%. And then, of course, ASML, also one of the big leaders on the year, up over 31% here. On the day, Micron up 14%. Texas Instruments is basically flat. Qualcomm, another very undervalued opportunity at the moment, in my opinion, up almost 18% at the moment here. And Broadcom up over 17% as well. So if you come over to valuations, which is basically the main discussion along with the growth, what we did discuss in one of our previous videos is that a lot of the times the margins are almost the same for most companies, except for NVIDIA and Broadcom. They have very, very high gross profit margins at well over 70%, but net income margins, no one comes even close to NVIDIA at well over 48%. Texas Instruments comes in close at 37%, ASML at 28%, On Semi at 26%, and then of course we've got SMCI up just under 8% here, and Qualcomm also a little bit over 21%. So profitability wise and pricing power and margin wise, no one comes close to NVIDIA. Qualcomm is also pretty decent, along with, of course, On Semi and ASML. ASML is also a very fantastic semiconductor stock and chip stock here. And, of course, AMD is one of my favorites as well. But if you come take a look at the valuation, you know, a lot of folks have kind of mentioned that NVIDIA is trading at a very reasonable, very decent, very good valuation at 35 times earnings. It's actually not that bad. I agree. However, I will only point to earnings expectations, because NVIDIA's earnings expectations are actually quite insane. Because if you come take a look at earnings expectations here for NVIDIA, you'll notice that they are expected to once again increase earnings by almost 90% after seeing over a 500% growth in earnings, and then look, where they're expected to moderate a little bit at 19.2%, then just a little bit over 16%, just over 19%, then basically flat earnings in 2029, and then just very, very modest growth of about 10 to 11%. So as the growth rates start to stabilize a little bit, there is expectations that earnings can start to, of course, decelerate in that growth rate, and price to earnings multiple that it trades at can start to come down as well, because 35, 36 is obviously not undervalued or cheap by any means. Broadcom at 23.27, AMD, because of its GAAP numbers here, non-GAAP of course trading at 28 right now on a fiscal 2023, actually 3 years out, fiscal next year is going to be 37, which again is going to be quite comparable to that of Advanced Micro Devices, but I believe the earnings expectations are actually lower than that of NVIDIA. So if you come over to earnings expectations here, yeah, so 37% growth, but it is going to be a little bit more stable, 30+% growth over the next 5 years, meaning that 37, 50%, 31%, 38%. So basically they're going to accelerate earnings much faster in terms of that growth rate, as opposed to NVIDIA, which is going to grow at 90% this year, and then it's going to moderate down to under 20% over the next 3 years, and then even come down in the double digits over the following 2030 and beyond for NVIDIA. So even from that perspective, I think 37 to 28 times earnings for AMD is quite reasonable. Of course, none of these companies that I consider to be quote-unquote undervalued. I mean, one could argue Intel as being undervalued. One could argue Qualcomm at 15, 16 times as being somewhat cheap to undervalued. And even on Semi at 12 to 15 times earnings, 18 times earnings at somewhat undervalued. And even Micron can be considered as somewhat cheap and undervalued, but none of the big ones, right? None of the big ones, meaning NVIDIA, we've got Broadcom, AMD, ASML, and Texas Instruments. I would say, they're trading at decent levels, because the thing is that collectively, all their earnings expectations have ripped higher because of artificial intelligence and generative AI. So all the expectations for chip stocks when it comes to EPS has gone up, thereby making their valuations look a lot better even after the rallies that we've seen in the price. So the price has gone up substantially, so has earnings expectations. Not previous earnings, but earnings expectations have gone up in the future on the back of generative AI. And as a result, a lot of them might be trading at somewhat reasonable valuations, you could argue, with some that I would argue are trading at even better, like cheap or undervalued levels, such as Qualcomm, such as onsemi, Micron also. But again, the growth rate's not that strong for these companies. Micron is expected to kind of decline in terms of that growth rate. onsemi also somewhat flat here. 3-year CAGR is 16% for the revenue. And if you take a look at the earnings per share growth diluted on a forward basis, going down, and 3-year CAGR is very, very high at over 105, 106%. I'm assuming because the comps are going to get much better. And Qualcomm also 5.7% 3-year CAGR with a revenue of just over 10.7%. So very, very slow growth compared to NVIDIA, Broadcom, and of course ASML and AMD. So really, I mean, this is one of those semiconductor sectors here where you really have to pick and choose what you're really going after. If you are looking for high growth, if you are looking for bottom line is high multiples come with high growth, low multiples will come with low growth. And what I would argue though is high growth, even though the potential gains are going to be much higher, the volatility is also going to be that much higher for a lot of these companies, right? So if you take a look at the monthly chart on, of course, NVIDIA, I mean, this is, overbought even on the monthly time frame, and on the weekly time frame, there was a little bit of this inverted hammer candle, which could signify somewhat of a trend reversal. Of course, we'll find out eventually. If you take a look at Advanced Micro Devices, very similar candle here, very, very overbought on the RSI at over 82. And the MACD also with an inverted hammer candle. Support level is going to stay put at 163 down to 151 for Advanced Micro Devices moving forward. And then, of course, coming over to SMCI, just a massive, massive move to over $1,140. Weekly RSI at over 94. Monthly RSI at over 93. And this has, again, been one of the best performing stocks here over the last couple of years. And it's kind of interesting, crazy that we talked about this stock back when it was at $40, $50 in February and March of 2023. And since then, of course, we have seen a over 2,000% rally for the stock here during that time. So over 1,800% gain for the company. Now, I did trim a little bit of SMH, and the reason being is because of the technical levels and how overbought, extremely overbought it is. And I wanted to lock in some profits, and my cost basis is around, I believe, 160s. So right now, so it's going to be actually a little bit lower. So I think it's in the 150s for SMH. It's up over 45, 46%. So yeah, That's where my cost basis is, and I'm comfortable holding on to remaining of the position, and might as well just add a little bit more on a pullback. So if it does actually, let's say, drop back down to 20% drop, sub $200, 175, 178, I may dollar cost average a little bit more and more aggressively here, but I just cannot fathom myself kind of buying at these levels anymore. I was very interested in kind of picking up, let's say, $500, $1,000 worth of SMH every single week. But, it's gotten to a point where I have to take some off the table because my position had grown by over almost 50%, and it's a pretty big position, right? So VUG, that's another experiment that I've been doing. I've been buying every single week. SMH was another experiment that I was doing, and a kind of position built up to a pretty sizable one, and especially after the 50% rally, it's also grown substantially, so I had to take some off the table. And support level, like I said, is going to stay put at 161, kind of in line with its previous resistance levels, all the way down to 131. Now, is this the beginning of a sell-off in the chip sector, chip stocks and semi stocks? Nobody has any idea, but I will argue that valuation is actually quite reasonable for semiconductor stocks. Even though the prices have rallied the way they have, valuations still look reasonable for chips. So this idea that, just because stocks have rallied over 500% or 1,000%, that they deserve a 40 to 50% crash, I don't buy it, because the valuation support is pretty strong. The fundamental support is pretty strong because NVIDIA, SMCI, AMD, ASML, Qualcomm, Broadcom, all these companies are super profitable, with most of them having negative net debt, meaning more cash than debt on the balance sheet. And they do have, again, fantastic growth in free cash flows, profitability, margins are pretty solid. So it's not like a quote-unquote bubble, but yes, they are all trading at very expensive valuation, with a few exceptions of Qualcomm and onsemi, and even Micron to some extent, trading at quite reasonable valuations, but they also come with lower growth. So bottom line is, chip stocks and semiconductor stocks in general, on aggregate basis, valuation-wise, I would say trading at a bit of a premium, right? So, and even at a premium, they are somewhat fairly good. I mean, we're not looking at 80 to 100 times earnings multiple and insane like 30 times sales, although NVIDIA is closer to 17, 20 times sales. But on an aggregate basis, valuations are a little bit of a premium, not super exuberant or euphoric, only because earnings expectations have moved up. However, technically speaking, the technicals are what's more important here. Technically speaking, we are incredibly overbought, especially for some companies like SMCI, NVIDIA, AMD. Like, they're just incredibly overbought, even on a weekly time frame. SMH also at over 81. So a pullback or a /dip correction is inevitable. It is going to potentially happen because of how technically overbought we are, but not because the valuations are insane. Valuations are trading at a bit of a premium, but not super high, super crazy levels. So the moment we see a pullback, the moment we see that RSI cool off a little bit, the moment we see that technical correction, that's when, in my opinion, I'll start buying once again. SMH, I'll turn the dial towards deploying more cash into semiconductors and chips once again. So hope you all enjoyed this video and found it helpful. For the long term, I have no problems being optimistic and being very, very bullish in chips and semiconductors. But of course, right now, technically speaking, it's absolutely crazy how overbought we are at the moment. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.